Good morning, good evening, everyone, and a very warm welcome. It's wonderful to see you all today, joining this Sunday from different parts of the world. As members of the Indian diaspora or NRIs living around globally, we share a very unique connection, to the growth story back home. That's India, right? And which makes today's conversation extremely or especially meaningful. So once again, thank you for being here. Our guest today is a man who has brought incredible clarity to Indian investing, Mr. Saurabh Mukherjee. And I'll tell you a quick backstory here. So I met Saurabh a few months ago at Stanford University in the US, and I was literally, had this fanboy moment of seeing him because I have been following his journey for long. When I had my first Demat account or a brokerage account in India back when I was 18, and I, would check out, hey, who are these big wigs, you know, kind of mastering the Indian market, and that's the, path where I came across Saurabh and always seen him in the media or his books. But it's a pleasure today at INRI to host him for this session. So Saurabh, thank you for being here.
My pleasure. Thanks, Hemant. Thank you for inviting us.
Yeah. And before I quickly get into the session today, I quickly want to also share about INRI for the people who are uninitiated. So INRI is a financial super app for the 35 million Indian diaspora. We are on the mission to make things easy for NRIs, OCIs living around the world. And we have had this journey for the last 2 years. As of today, we have more than 15,000 Indians globally part of this platform from 40 plus countries. Uh, US is one of the primary markets for us. And I'm personally based out of the Bay Area in the US. We offer investments beyond borders. We have investments in India, particularly through mutual funds, Gift City, startups, PMS, and even global funds now. We offer cross-border tax and compliance. We are already live in three countries, which are India, US, and Canada, and there are more coming soon in the future too. We also have a marketplace, essentially solving all your needs and essential and ancillary services, like starting your business, incorporating in either of US or India, documentation, banking, and so on. Now, quickly coming to Saurabh. Saurabh needs no introduction, but I'll quickly share a few lines. As the founder of Marcellus
कम
Investment,
करो ना वॉल्यूम.
sorry, can you hear me?
कम करो वॉल्यूम.
Please mute.
निया ना वॉल्यूम कम करो.
Please mute yourself if you're not speaking. Thank you. As the founder of Marcellus Investment Managers and the author of groundbreaking books like Coffee Can Investing, Saurabh has taught millions to focus on long-term quality and rational decision making. For many of us to invest early or wisely in the Indian market from afar, his voice has been an essential guide here. Now, Saurabh, we are incredibly again grateful to take the time today and introduce. Let me introduce you to everyone.
Thank you. Thanks, Hemant. Thank you for inviting us. I think we got my colleague Hardik Nayak as well. So Hardik is the guy who looks after our North American clients in terms of making sure that they're properly invested both in India and in our global product. So it'll be good to get Hardik's comments at some stage over the next hour. But Hemant,
Sure.
go on. How can we be of help to you?
Yeah. Thank you, Hardik, and thank you, Dharmit, as well, from the Marcellus team here. So, Saurabh, let's start by rewinding the clock. Long before you became one of India's influential investment minds, you were in fact one of us, an NRI yourself, starting your career in London. And many people in this room share that experience of looking at India from outside, right? Like seeing the growth. Now, can you take us back to that time and what did the India story look like then and versus now? And how did that distance, or that NRI perspective gave you an insight to come back to India or take this India opportunity?
Sure. So even like many people on this call, right? I grew up in northern India. I grew up in Delhi, and when I was 14 years old, my parents migrated to the UK. They migrated to the UK. I went to a school in South London. Then I went to the LSE, and then I worked for one of my professors at the LSE for a couple of years. And when I was 25, I set up my own firm. The firm did pretty well. There's a bunch of things I did which made us a fair bit of money. By the time I was 30, we were reasonably well off. The firm was doing well. That's when my wife and I became parents. So in 2007, my wife and I became parents, and we sat down and had a chat, and we said we want our children to grow up in India. So 2007, our son was born. 2009, our daughter was born. But after our son was born, we sat and did the maths, and I've studied economics, so I told my wife that I think India will pull off 6% growth between our son's birth and by the time he turns 25. And she said, if that's the case, then by the time our bacha is 25 years old, India will be the world's third largest economy. And that's when the penny dropped on me. I said, let's raise these kids in India, because if we raise the kids in India, then they have a choice of living in India or living in the West, right? As everybody on this call knows, for Indians to migrate to the West is about as easy as it is for me to take a flight from here to Bangalore, right? For us, migrating to the West comes very easily, very naturally, English, good education, etc. But I realized that if we raise the bachas in the West, then they'll get stuck over there, right? By the time my son is 25, he's now 18. He's, by the way, he's out partying at the moment, which is why I'm looking at the phone, trying to figure out when he'll get home. So by the time he's 25, India will be the world's third largest economy. And much of the opportunities in our children's lifetime will be in Asia, right? America will remain a vibrant economy, but much of the most exciting opportunities in my children's lifetime will be in Asia. So I said, from the bacha's perspective, the kids' perspective, let's sell the business in the UK and migrate to India. So we're very lucky that we decided to sell the business a few months before Lehman. I put the business up for sale in January 2008. 10th May 2008, we found a buyer. Portugal's second largest bank acquired our firm. And that night we migrated to India. Right, my parents and my sister didn't move. The entire rest of the family didn't move. They still stay in the UK or the US. But my wife and I moved to a suburb of Bombay 18 years ago, and we're very happy here. As I said, my son's become 18. He'll probably now go off to study in the West. But the choice that we've tried to give our children is they can work. If they want to work in India, they can work in India. They speak three Indian languages. Or if they want to work in America or the Western world, that choice is always open to them. So that was how we ended up migrating from my upbringing in the suburbs of London. In fact, where the fifth test is currently being played, my office was very close to that, and my school was a little further away. So we migrated from South London to North Bombay, and we're very happy in North Bombay.
No, thanks for sharing. I think your story definitely resonates with many NRIs who have returned, or also in the boat where they are thinking about moving to India. Now, I have a kid who's a 2.5-year old, and I think this is something definitely we wonder as parents is like, how do we want to kind of raise up our kids? What culture we want to give them, and what could be the best.
Yeah, I have to be honest, Bombay culture is just as anglicized as Silicon Valley or London, by the way. So I'm under no apprehensions. My son doesn't speak any more Bangla than he would had he grown up in South London. In fact, I think had he grown up in South London, his Hindi or Punjabi might have been better
Yeah.
than it is by growing up in North Bombay. So the cultural aspect I'm not that fussed about. What I wanted the kids to be very clear about is how do you find your way through a country with 1.5 billion people?
Mm,
So our office, for example, is on something called Andheri Kurla Road. Right?
mm,
If somebody grows up in Silicon Valley, they won't be able to cross Andheri Kurla Road were they to grow up in Silicon Valley. Right? You guys, you'll be able to because even you didn't grow up in Silicon Valley. So I
yeah.
didn't want my kids to be in such a position where they grow up in the West, they grow up in London, and they come to Bombay and they can't cross Andheri Kurla Road. Right? That would mean the whole opportunity presented by Asia would go a begging.
Yeah. By the quick thing I wanted to share, I'm born and brought up in Mumbai, so lived 26
Right?
years of my
Awesome.
life there.
There you go. You'll be just fine on Andheri Kurla Road.
Yeah, yeah, exactly. Great. So thanks for sharing that NRI thing and how that story unfolded for you. Let's take time to talk about the India story because I think everyone wants to hear that. And especially from a NRI perspective. From your point, what is the single most misunderstood aspect of the India growth story by global investors, including NRIs? And conversely, what is the one thing that they seem to get absolutely right?
So I think we're both sides, right? America. So we manage money for North American institutions investing into India, and we manage money for Indians investing into the Western world, right? So we have something called the Global Compounders Fund, which invests into Europe and America. And traveling around institutions in America and then meeting Indian H&Ws, I've realized both sides have their misperception. Let's start with the Indian misperception, right? If you go and pitch to a typical H&W in Bombay, Delhi, Bangalore, they will say the only country I want to invest is in India. They'll say India will become Viksit in the next 20 years, and we want to make a lot of money from that, and hence we're not interested in investing anywhere else, right? So if you told, I'll just beam up a few slides just to make it easy to understand. If you told Indian ultra H&Ws or family offices that look over the last 20 years, India has been the best market, but over the last 30 years, and indeed over the last 10 years, the United States USA is the best market. They're not willing to listen. Most Indians believe that the only market to invest in and make a lot of money from is India, right? That's the local perspective in the big cities of our country. And conversely, when we go to pitch to American investors, they say, well, 70% of our allocation is to America. 2 to 3% will think about India. And I say, well, why do you want to do that? India is the only other market. So I've shown you the world's top 5 markets in this table. If you look at the table on the top left, you're seeing the world's top 5 markets. But even if you took the world's top 10 markets, the only countries which deliver double-digit dollar returns over long periods of time are USA and India. No other country pulls it off. Only USA and India amongst the world's big markets can give you double-digit dollar returns. But most institutional investors in America are not aware of that, right? So Indians don't think investing in America is worthwhile. Americans don't think investing in India is worthwhile, and that's a shame for both sides. Why is it a shame? Because amongst the world's big markets, these are the two markets with the lowest correlation with each other. Right? India and America are the two most successful stock markets in the world, and they're also the stock markets with the lowest correlation. So we've shown that in the right-hand side chart, right? The correlation between Nifty and S&P 500 is the black line. You can see it's the lowest line. And if you were to look at an even more fascinating stat, look at the bottom right table. Months in which S&P 500 returns are negative, right? When the American market misfires, there is very little correlation in between the Nifty and the S&P 500 when the American market misfires. The left-hand side table shows you when S&P returns are positive, there's very little correlation with Nifty returns, right? So 70 years ago, right, a man called Harry Markowitz sitting in Chicago 70 years ago, Harry Markowitz, sitting in Chicago, created portfolio diversification theory. He got the Nobel Prize for this in 1990. I read his work in the LSE in 95. It took me 10 years to understand Harry Markowitz. Harry Markowitz should be the person all of us on this Zoom call should thank, because what Mr. Markowitz said is very simple and very powerful. He said, if you have two uncorrelated assets, let's call one asset India, one asset America. If you have two high quality uncorrelated assets, say, let's assume America compounds at 13%, India compounds at 10% dollar returns, right? If you go 50-50, America, India, your returns will not be 10. Your returns are not going to be 11.5 either. You'll get the 13% return. You'll get the higher return of the two markets. That's the first Markowitz conclusion, right? You diversify between two high quality markets, you get the higher return of the two markets. Secondly, Markowitz said your volatility will be the lower of the two markets, right? So you could get American returns, you could get lower volatility. That's the free lunch in finance. And thirdly, Markowitz said ex ante, before the event, neither Hemant nor Saurabh has to forecast whether America will do better or India will do better. All we have to do is diversify equally across two high quality markets. So to all my clients in India, to my friends and relatives abroad, right? My friends and relatives abroad also tend to have a bit of an anti-India bias, right? I tell them and I tell my clients in India, go 50-50, put half your money in the Western world, right? In our global compounders product, and put half your money in India. And we have a product called Meritorkey, right? Don't make the stupid mistake of doing all West or all India, because you're needlessly giving yourselves sleepless nights.
Mm.
You're needlessly giving yourself tension, right? You're not going to get any more money just because you've loaded up on India alone or America alone. You're not going to be any richer. You're just going to give yourself faltu ka tension, needless sleepless nights, right? So
Mm.
50-50 America, India. I have to be honest, it took me 10 years of living in India to figure this out,
Mm.
right? When I made the trip from UK to India, I had left some of my money in the West, in the Western stock markets because of just sheer laziness, right? I'd saved some money over there, which I left over there. And during COVID, I was comparing my returns between the money I'd left in the West and the money I had made in India, and I realized to my surprise that both markets, my Western portfolio and my Indian portfolio, both had given similar returns, but because I had accidentally diversified,
Mm.
my volatility had come down and I was doing just fine in my overall level of compounding.
Yeah. So as I read, diversification is the key, and it's not India versus the US or India versus the world, but it's India and the world.
Haji, and just one more point on this. A lot of people in India, for example, they think I bought one large cap fund, I
Mm.
bought one mid cap fund, but one small cap fund, मैं तो diversified हो गया. That's not diversification, boss.
Mm.
You're just tripling the bet on India by buying multiple Indian funds, right? And the
Mm.
human brain likes to do that because the human brain craves dopamine. So
Mm.
if I've made money in Indian small cap, what do I want from Hemant? Another small cap fund. Right? The
Mm.
last thing I want Hemant to tell me, boss, you've made money on Indian small cap, now do US small cap. Right?
Mm.
I want to double the bet. If I made money on one flat in Noida, what do I want? Another flat in Noida. Right? So
Mm.
that's unfortunate aspect of how the human mind works. The human mind craves dopamine. What the rational investor or the rational advisor does is helps the human mind say dopamine bhul jao, forget dopamine and diversify.
Got it. So, thanks for sharing that perspective. And I think a lot of credit to Markovitz to kind of rationally explain the logic there. But, NRIs always have this dilemma, like currency depreciation, USD, INR, you know. I know it kind of comes in your answer, but do you want to like give more flavor into like returns
So look, I
between?
mean, this is where the education in LSE helps, right? So LSE, we studied something called the Stolper-Samuelson theory. In my 17 years in India, I haven't met one person who knows what the Stolper-Samuelson theory should. It should be our dirty secret, you and me, Hemant, and the 37 people on this call, right? What does the Stolper-Samuelson theory say? It says that any emerging market will have higher inflation than an emerged market, especially a fast-growing emerging market will have higher inflation than a developed market, right? Why will that be? Quick answer is in any emerging economy, the services bit cannot be arbitraged, right? I can't arbitrage a haircut in Bombay with a haircut in Silicon Valley, right? So because the haircut in Bombay can't be arbitraged, as Bombay gets prosperous, haircuts will rise in price quickly, right? And because services is 60% of our economy, the rise in haircuts, the rise in restaurant fares and so restaurant costs and so on will jack up inflation in India. It will make inflation in India typically 3% higher than inflation in the Western world. The currency will then depreciate. Our currency will then depreciate to make up for that. That's how Japan developed. That's how Korea developed. That's how China is developing. That's how Taiwan developed. That's how India will develop, right? So the currency depreciates by 3 to 4%. So over a 10-year period, the rupee gives up one third of its value. That's not a big deal because you and I can diversify out of it. How can I living in India can diversify out of it by investing in America. I living in India can and have diversified out of it by investing in our global compounders fund, and you guys living in America can diversify into it by investing in India, right? These are dollar returns. What I'm showing you, the India returns, in fact, all the countries' returns are dollar returns. So the stock exchange, the stock markets adjust for the currency depreciation. And as I said, in US dollars, the only markets which give you double-digit dollar returns over long periods of time are America and India. Those are the only two markets you need to borrow your head about, apply your head on those two markets because correlation is low, because they don't have that much to do with each other, right? As I'm sure you know by now, there's very little trade between India and America for effective purposes other than IT services and Dawai. There's nothing really important that America buys from India and vice versa. There's not much we buy from America other than electronics, IT, and tech, right? So the economic linkages are low, so it creates natural diversification. As long as you and I lock into both of these markets, I don't think we have to sit up at night thinking about the currency.
Makes sense. And I think it's also about, like, as you say, correlated, right? Like just how people think about gold, right? Or maybe Bitcoin today. Like it's a way to diversify and also look at
हाँ
things.
जी, हाँ, गुड पॉइंट. सो
Yeah.
गोल्ड का पॉइंट आपने अच्छा छेड़ा. नाउ द आइडियल पोर्टफोलियो एक्चुअली should
Mm,
be one third India, one third America, one third gold. The only reason I didn't flag gold at this juncture is gold is expensive today. So if you already have gold in your portfolio, good for you. रखिए
mm,
उसको one third, one third, one third. Third gold, third America, S&P 500, third Nifty. If you don't have gold, I would say just wait a bit, right? This diversification is a good thing, but the best way to diversify is diversify from the expensive market to the cheap market. So today, what am I selling? I'm selling Indian small and mid cap, right? I've sold in my Indian small and mid cap and loaded up on global compounders, which is American small and mid cap, right? What am I selling in America? I'm selling American mega cap, right? Nvidia, मुझे कोई interest नहीं है. These are mad valuation, right? So the two bubbles that I'm trying to avoid are Indian small and mid cap and American mega cap. These are two bubbles. महंगा है. And the two things I'm running towards is Indian high quality names, classical Marcellus coffee can type names,
mm,
like Asian Paints, like HDFC Bank. Those are available cheap. Nobody else wants to be buying high quality Indian names today. So Indian large cap quality and American small and mid cap. American small and mid cap is at 26-year lows. Trump G ki jai ho. Courtesy Trump G, American small and mid cap is at 26-year lows. The discount of Russell 2000 to S&P 500 is 26-year lows. We are buying companies compounding earnings at 15% dollar terms at
mm.
16 times earnings. Right? So maza aa gaya. Third. When gold becomes cheaper, then would be the time to diversify. If you already have it, kudos to you. Well done. If you don't have it, I would just say wait for a conk off in gold, and that would be the time to go one third, one third, one third. That's the bulletproof portfolio.
Now, thinking from an NRI perspective, like I think, let's say me sitting in the US, I have a US portfolio. Maybe I have some bit of gold, but India seems very opaque to me because I'm sitting here, difficult to see or know what's happening in India. And I have money there, right? And I'm sure like that's true for NRIs too. Like they have money sitting in the bank. This is very funny. Like I speak to customers and they say, "Yeah, I have 1 crore sitting in the bank," and I'm like, "Okay, you're not earning enough. What are you doing really?" Like, and if you don't want the money to be back in the US, like you are literally like losing on money. Inflation is high and so on. So how does NRI think about investing in India? And there are multitude of options, right? You can open a demat, invest directly, but it's hard, right? So many things happen,
So
change.
look, I mean, I think as I think you're trying to allude to him, if an NRI leaves money in the bank, no, then in dollar terms, by the way, even for us, dollars are the only relevant currency. There's nothing in India that is rupees, right? So my laptop is a dollar purchase. I mean, I bought it in rupees, but it's irrelevant, the currency, right? My iPhone is a dollar purchase. My iPhone is made in Bangalore. I'm very proud of my made in Bangalore iPhone. But 90% of these parts are imported, right? So two days from now, I'm flying to Bangalore. The plane will be imported. The crude oil will be the aviation fuel will be imported. Sometimes even the pilot is imported. Everything inside the plane will be imported. There are actually many parts of the plane are parts of our global compounders portfolio. My son will be going abroad to study 2 months hence. Obviously, I'll be paying his fees in dollars. And a month ago, we were holidaying in Switzerland. That was dollars. So for all of us, right, uh, whether you are living in Silicon Valley, in Boston, in London, or India, the only currency in which savings matters is dollars, right? If you want to save in dollars, why on earth would you keep your money in an Indian bank account? I'm not so sure, because every rupee you keep in an Indian bank account over the course of a decade in dollars, it will be worth one third less, right? Currency that matters to you and me is dollars. So every 100 rupees you keep in the bank over the course of a decade will depreciate by at least a third. So find an equity investment. Don't try to do it yourself. There are plenty of high quality mutual funds, high quality PMSs. I'm sure INRI provides access to that. But be careful of the small and mid cap bubble in India, right? A lot of households in India have been brainwashed into believing that there is some kranti going on in small and mid cap. They've emptied their bank accounts and put their money in small and mid cap. I think there's going to be a massive blow up there. So don't make the mistake of taking money out of the bank account and putting it in small and mid cap. go towards large cap and go towards quality. Quality has been on a holiday. Our type of stocks have been on a holiday for the last 5 years, largely because growth was abundant. Now that growth is drying up in India. So I'll show a slide here. Now that growth is drying up in India, quality is coming back into fashion. So the simple thing to buy. Let me just beam this up. So, so what we have tried to do for you here is show you how quality and value dance with each other in our country. So quality is investing in, say, HDFC Bank, Titan, Divi's Lab, Pidilite type of stocks, and value is buying, say, rubbish PSUs, crony capitalists, and so on, right? The sasta stocks which do really well in a bull run, right? So Bloomberg thankfully provides a quality index and a value index, or if you don't have Bloomberg, there's a Nifty quality index and there's a Nifty value index. These are easy to gather, and we just took the publicly available quality and value indices. What you can see is the red bar is above zero. The red bar above zero means quality is outperforming value, right? And red bar below zero means value is outperforming quality, right? So what you see over the last 15, 20 years, and it's a very stable pattern in India, is quality outperforms value when earnings growth evaporates, when the growth environment is hostile. So growth environment is the blue, is the dash, is the, sorry, the blue bar. Blue bar is Nifty 50 EPS growth. So when the growth environment is hostile, Nifty 50 EPS growth is weak. That's when quality outperforms value. So if you think back to 2018, 19, 20, after the blow up, after Demon, after the blow up of Divan Housing, Yes Bank, ILFS, and then the onset of COVID, we had 3 very tough years in India from a earnings growth perspective, and quality, which is our type of coffee can style investing, boomed, right? Then courtesy COVID, households sat at home for 2 years. And when they came out in 2021, 22, they did a lot of revenge spending. Plus the government did infrastructure spending. As growth boomed in India, the blue bars, look how the blue bars go 14, 43, 9, 23. As earnings growth boomed in India, people like us got smashed, right? Quality suffered. Quality suffered. You can see the red bars being below zero. In fact, these 4 red bars, F21, 22, 23, 24. This is, by the way, the Bloomberg definition quality. This is the deepest suffering of quality that we have seen since these indices were created 25 years ago. Then in FY25, growth evaporated, earnings growth evaporated in FY25. Right, we're living through the deepest slowdown in earnings in India now. And as earnings growth has evaporated, quality is coming back. So this year, F26 quality is again staging a comeback. If you want to just think about it in simple banking parlance, HDFC Bank is once again performing way better, both on fundamentals and on share price than the PSUs. The PSUs are having asset quality issues, and then soon be raising tons of capital and diluting their shareholders, right? So if you want to invest in India, look for large cap quality. That's where the value is. So that's where the pockets of attraction are. Don't take money out of the bank and buy small and mid cap today. If you want to take money out of the bank and put it to work, call my colleague Hardik or Dharmit. Will help you invest in a global compounders product, which is invested in European and American small and mid cap. I stress again, folks, European and American small and mid cap is trading at 26-year discounts, 26-year high discount to S&P 500. To my mind, this is a slam dunk buy small and mid cap in your part of the world, right? You're getting world-class companies, 20, $30 billion, which in India is large. For you guys, it's small. 20, $30 billion in American parlance is small. But these are companies with market leading positions. So for example, every plane ride you and I have taken, everybody on this call, every plane ride you and I have taken, you have made, and I have made a man called Nick Howley very rich. Why have we made Nick Howley rich? Nick Howley controls 95% of the seat belts in the world. Right? He runs a $20 billion market cap company listed on NYSE called TransDigm. TransDigm is a monopolist in airline seat belts, right? What the American and European markets do is give you and me access to a whole host of these chota monopolists. Chota in the Western sense, bada in the Indian sense, courtesy Trump G card tweeting. These companies are available at 1.5 times PEG, right? They're available at half the valuations of the Indian small and mid cap. It's crazy. American and European small and mid cap, Hemant, are available at Adha valuation of India with double the growth. right?
Mm.
Jai Ho Global Capital Markets, they're getting half the valuation of the Indian small and mid cap
Mm.
for double the growth, right? So that's why I put half my money there and half my money in Indian high quality stocks such as HDFC Bank, such as Titan.
Great. Thanks for the detailed perspective. I think I get two takeaways here. One is don't leave INR in Indian bank accounts. Like I think it's kind of stagnating and will not give you much
Not stagnating, depreciating.
depreciating.
आपका पैसा 100 रुपए का 70 हो जाएगा. If you want to depreciate money, give it to me. यार, I'm happy to take your money if you want to
Yeah.
just throw money out of the window.
Yeah. And I think the second one for me is like it's hard to do it yourself. Go with managed funds or experts, whether mutual funds or even more sophisticated instruments like PMS, which Saurabh offers and his team. Now, Saurabh, I think there's one thing that it has come up in the last few years is gift
हाँ
city,
जी.
right? What is your perspective there and how to, especially from an NRI or a foreign investor perspective, getting, Indian documentation super hard, right? What changes with gift city and what do you think for the next 10 years this would look like?
So, so we did Gift City for our global fund. So we wanted a global fund. So we first went to Wall Street. We went to your part of the world. We went to America, found the best people, found a star fund manager. He was working for Principal Global in Wall Street. Sarindam had migrated to America to study at Duke in 2011. He topped his class in Duke. Principal hired him from campus in 2011. 2017, Principal Global made him a fund manager. 2022, we managed to persuade Arindam to migrate back to India and run a global product. So we went to Gift City, got a license. So we have a fund in Gift City, which feeds into a fund in Cayman Islands, right? And then we went to the government of India and requested them to think sensibly about tax. This is more relevant for us. The tax piece is not relevant for you. You guys don't have to pay tax here, right? And the structure we created was we have a feeder fund in Gift City where people like me who live in India, we pool our money in Gift. Then it feeds into a Cayman fund. A Cayman fund is run by a New York office, right? So we are SEC regulated MN. A New York office runs our Cayman fund. So people who live in America or Dubai or Singapore, they invest straight into a fund in Cayman, right? They invest straight into a fund in Cayman. People like me who live in India and I have to file tax returns here, people like me, we invest through GIFT. So that's the same underlying fund that we are hitting, but we in India are hitting it through GIFT City. Hemant in Silicon Valley is hitting it straight, right? And that fund in turn is investing in 30 stocks in USA, Canada, Germany, Sweden, Holland, France, etc., etc. And you in America will get the returns gross. When you redeem, we will give you returns gross, and you will then file tax returns in your whatever IRS format that you guys have. Hardik, we give all the relevant tax documents we give to American investors, right? To global compounders.
Yes, we do. Yes, we do. Even in the Cayman Fund, we do.
Yeah. So Hemant, that's why GIFT has become very useful for us, right? For us in India, it's given us a gateway to do tax efficient, low cost investing. And just to give you a sense how tax efficient it is, we don't have to pay a single rupee on buying and selling stocks to the entire life of the fund. This is for us in India, whether it's also true for you in America. So the entire life of the fund, there is no incidence of tax. Upon redemption, we in India, for clients in India, the fund in GIFT pays the government of India 12.5% tax and returns the rest of the money to the investor. From January this year, the RBI allows all of us to have dollar bank accounts in GIFT City. From January 2025, ever since RBI Governor Malhotra arrived, the RBI allows all of us to have dollar bank accounts in GIFT City. So when I redeem from my GIFT fund, I don't have to bring the money back to mainland India. I leave it in dollars in GIFT, and from there only I can use that account and pay my son's college fees in the UK. Right. So this is a facility that we enjoy in India. For you guys, I would suggest go straight into our Cayman fund. And as from your perspective, we will give you the returns gross of tax, and you then file returns with the IRS in America.
Got it. Um, So, I think one thing in terms of diversification we didn't talk about is real assets or which is real estate, right? And Indians, especially NRIs, are very heavily into real estate. I know many friends here were like, I'm buying a land in India, right? Or I'm buying an apartment in India, or may have already, places like through their parents and so on. What do you think about Indian real estate, and is it a wise choice, especially for an NRI who cannot do it from here?
Look, I mean, I can give you lots of story, status, lots of statistics, but let me give you a simple story, right? My dad, my dad and his friends pooled their money in 1980, and they bought a piece of land just outside Delhi, close to the Delhi Ghaziabad border, right? It's called Patparganj. They bought it in 1980. The sort of lower middle class engineers from IIT, बहुत रगड़ा रगड़ी करके, these IIT engineers pooled money for 10 years and managed to put the building up in 1990. A year later, my parents and I migrated to the UK, right? So that was 1990. The flat 80 they put the money in. 90 the flat got built. Subsequently, that became a flourishing suburb of Delhi, right? Uh, Multi-lane national highway, uh, multiple metro lines zipping past it, shopping malls. It looks like a lovely place, right? I kept tabs on it because I wanted to see kitna paisa banta hai from a property invested in a booming part of Delhi. We sold that flat 2 years ago. We sold that flat 2 years ago. I did the CAGR on it. The CAGR was 7% in rupee terms, right? So inflation in India over that period, 1980 to 2023, my parents owned this flat for 43 years, right? An enormous amount of their savings went into this when they bought it. 43 years my parents owned this flat. 7% rupee CAGR. Inflation over that period was 4-5%. So real return mila, dollar return mila 2%, right? So that's what's going to happen to most ordinary Joes like me when I buy real estate. Unless my chacha is a politician or my nani is a politician, right? Unless we are part of the political elite, real estate in India is a single digit return asset class in rupees, right? So already the market is conking off. So we track it quite carefully for exactly the reason you're asking. The market is conking off. Enormous amount of black money went into real estate through 2020, 21, 22, 23. As the black money ebbs off, both the middle class end of the market is coming off, and the what's called the mid to high end. If you look at the top right chart, the number of units sold is coming off. But if you look at the top right chart, the mid to high end is coming off very sharply. The light blue bit is coming up. Luxury, ultra luxury is still holding off. But I reckon there'll be a raft of redundancies now across banks, NBFCs, IT companies, media companies, and that will put paid to the luxury ultra luxury. Valuations don't make any sense. This little flat I'm sitting in North Bombay, this flat is worth $1.5 million, right? The rental yield on this flat is 2%. 2% is the rental yield, right? Cost of borrowing in India is 8.3%, right? If I went and took a home loan to buy this flat, the 8.3%, rental yield is 2%. To any sane individual, that's a sign that you shouldn't buy real estate unless your family is part of the political elite and you can do all sorts of setting and get property on the cheap.
Hmm. No, great insight there, and I think it's not for the common man, I feel, and especially for an NRI, I feel like, NRI someone is like who wants to, like, maybe also they're living in the US because they want to be away of all the jamelas, and I think getting into real estate is a big jamela in itself, I guess. What
I
do you?
mean, look, I mean, you have to deal with all. I mean, this is Bombay, where thankfully we don't have to deal with the mafia
Yeah.
to buy and sell. But in parts of northern India, I have relatives. And by the way, I don't mean some small town in northern India, NCR,
Mm.
right? Yeah, they have to deal with the mafia, and then I think capital gains tax is 20%.
Mm.
After you've sold the bloody thing somehow and dealt with the black money ka hassle, I don't know why everybody does it. I mean, even as I describe it to you, right, it just blows my mind that somebody does it. But anyway, there's this kind of um, strain in all of us that zameen chahiye, makan chahiye, घोसला का घोसला type एक spirit आ जाता है लोगों को.
Yeah, yeah. And I think it makes sense. I mean, to have a home, but not means like if you're thinking of investment. Investment is a different thing. People, I think, confuse that कि मैं घर बना रहा हूँ, but वहां नहीं रह रहे हो तो फिर why do you want it, right? And
So I think one argument I've heard from my relatives abroad. By the way, increasingly I don't see too many relatives abroad do this, but those who do it, I ask them, why are you buying now? I mean, given all this craziness. They said, no, when I retire and come back, no, I want this flat in Bombay or Delhi where I'll stay. So I tell them, why don't you compound your money in the stock market? You'll compound at 11, 12% dollar, right? Whether you do India or America, doesn't matter. You make 11, 12% dollar. Then take that accumulated compounded wealth, come and buy the property. Real estate ain't going to compound it faster than 11, 12% dollar, right? So I find the argument that I want to buy it today. Otherwise, when I retire, what महंगा हो जाएगा? It's one of the crazier arguments. And whenever you hear that, Hemant, just tell them, please compound whichever stock market you prefer, India or America. You'll get 11, 12% dollar over long periods of time. Take that Jama Puni, take that accumulated wealth, and buy a flat wherever you want in Bombay, Delhi, Bangalore. You have more than enough money to afford it then.
Yeah. So just extending to that question, because you mentioned retirement, this is the point where NRIs think, मैं आज ये पैसा बना लूंगा और इंडिया जाके retire होऊंगा, or maybe 10 years, 20 years down the line. So how should I think about retirement? I know you gave some flavor to it, but maybe you want to expand if you have more to say.
But look, the way we think about it over here for our clients is we try to break their goals into three parts, right? The must have is you obviously have to create a retirement corpus. The maths is reasonably straightforward. You figure out how much you want annually and you compound that sum forward by the number of years hence that you'll retire. And then you do some simple maths on how much you'll compound through your retirement. So easy maths there. So amongst the must-haves usually is a retirement corpus. The second must-have increasingly for Indians is, and I suspect for even NRIs will be, a college fund, right? So for my bachas, my wife and I created a college fund long ago. So the must-haves tend to be a retirement ka paisa, a college fund to study in the Western world, and then good to haves are, say, when I retire, I want a 3 BHK in, say, South Bombay or Bandra or Greater Kailash, right? Which a good to have will be, not only do I want to retire, I want to retire in a premium property in a premium part of a big city, right? And luxury would be something that if you were able to do it, it will show that you moved to a higher status completely. So luxury would be a holiday villa in Goa or a holiday villa in Himachal Pradesh, right? Or a holiday villa in Coorg, right? Luxury would be something which connotes a very different standard of living altogether compared to what you've been accustomed to most of your life, right? So if you break your retirement goals into these three broad buckets, right? Must-haves, things which are non-negotiable; good to haves, something which will make your life a little pleasant; and a luxury, which connotes a different standard of living altogether. Then you associate with those streams different investments. So must have should be backed up by your core large cap high quality equity portfolio, right? If your must have isn't supported by a compounding machine like an HDFC Bank, Titan, or a Divi's Lab, I think you're creating problems for yourself. The good to haves, the good to haves can be funded by a US small cap portfolio, right? So it's stuff like Transdime or IDEX in the American market. These are fabulous compounding machines. Danaher in the American market, fabulous compounding machines should finance your good to haves, right? This is slightly riskier, but it will give you good compounding, allow you to give you a fighting chance of getting to that 3 BHK in Bandra or Greater Kailash. And then for the luxury piece, you can consider, I'm sure there are people on this call who are really wealthy, they can consider a venture capital, an Indian venture capital investment through an AIF route. Our venture capital scene, as I'm sure many people know, is vibrant. There are good local VCs in India now, plus the Silicon Valley funds have VC funds in India. So invest a small amount in a VC fund and give it 20 years, it could give you that holiday home in Goa or Shimla.
So picking up on your last thing, VC fund. So basically talking about startups, let's say. So how we see from here, like obviously the US startup scene is, one of its kind, but then the Indian startup also we feel it's booming, right? How do you see like these small, or like the entrepreneurs of the India coming out? I know they're also building for the US, but still like there is, unprecedented growth in this rise of startups.
Sure, sure.
See that.
So look, I live in front of IIT Bombay, so I have the privilege of seeing the startup scene. So outside Bangalore and Gurgaon, those are the two big startup hubs. Outside Bangalore and Gurgaon, the area outside IIT Bombay where I live is the third big startup hub. And the local Starbucks is colossal, right? It's a 150 seater. The local Starbucks is a 150 seater from 7 in the morning till midnight, it's basically filled with youngsters, angels, and VCs. So if I went now, it's 11:15 at night. If I went now, there won't be a single empty seat, and will the IIT kids hustling for investments. And there's a flourishing angel community in my neighborhood. So it's a WhatsApp group, and the angel community meets over Saturdays and Sundays at the startup at the Starbucks to assess new investments. This will work. This is working well. This will work even better in the years ahead. I think the government needs to do a few more things to make it efficient, tax friendly to invest in startups. I'm sure the government will expedite those. Plus, I think there's a separate set of initiatives the government needs to do to 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 remove red tape for small business. Right, there's still a lot of red tape for small business which exists in India. The finance ministry has created a committee to get rid of this. Let's hope and pray the FM's committee to reduce red tape for small business works. But I think the combination of drive from middle class kids who are highly educated but come from humble backgrounds, combine that with top class education in the Indian education system. I'm not just talking IITs, even many of the RECs, many of the local colleges, right, have become top class, and combine that with the digital ecosystem, right? Jandhan, Aadhaar, mobile, the lowest mobile data costs in the world, the UPI network. It's a very exciting scene. I think only rivaled by, I would submit, used to be China, but I think China is now a different wreck now. I think only rivaled by Silicon Valley. I think the ecosystem here in Hemant is the only system that can rival India.
Yeah, yeah. Now, that brings me to a topic which is, I think, technology, right? And sitting in the Silicon Valley, one thing I cannot stop hearing when I step out of my house is AI, and AI is kind of disrupting a lot many industries, which I think we didn't realize or, imagine. Uh, how do you see the role of AI now in investing and more broadly wealth management? And a follow-up question to that is, how does the role of an investment manager change? We've heard about robo advisors, but that has been
Yeah.
very, rule-based system. But it's gonna change.
So,
Yeah.
so I think by the time, say, my kids are in their mid-teens now. By the time they are my age, I don't think there'll be human beings like me doing equity investing. Right, we'll be taken out of the equation, especially in large caps. In stocks like a HDFC Bank or a Titan, I don't think there'll be human beings doing that work anymore. AI will be doing bulk of the decision making. Um, um, People like Hardik and Dharmit will be required because to persuade clients to
Mhm.
part with large sums of money, you'll still need a human being who explains to you that, sir, make this investment. This is why it makes sense for you. And that salesperson will have to evoke trust. He'll have to talk sense. She'll have to talk sense. So ironically, in sales and client-facing interface, the human being's role will last longer, especially in H&W selling. But in large cap equity investing across the world, people like me will become redundant. We will still have a role to play in small caps because वहाँ पे in small caps information is not that easily available. Even now, even in US small caps, right? Because we invest in US small caps, you've seen even there is degrees of information inefficiency. And secondly, liquidity in India, it's very difficult to get small cap liquidity. So
Mhm.
if you put a algo and tell an algo to go and buy $1 billion of Ami Organics, or say forget $1 billion, market cap goes to billion. Assume you tell the algo to go and buy $2 million of Ami Organics, he won't find the liquidity. So you need human traders to do the small cap trading, and you need human beings to do small cap research. Large caps, may people like me, large caps is around 70% of the Indian market. We will become redundant.
Mm. Yeah,
And
no.
by the way, you can also see what this implies, right? So it means that jobs like Dharmit and Hardik's will become far more remunerative. So value chain may the manufacturing piece, this value will get crushed. So whenever people come to me and say, I want to be an analyst, I say, was soch lo, think about it carefully. In value chain, the importance of the client facing person will go up, and the importance of manufacturing will get crushed because AI will be able to do much of the manufacturing.
Mm. So in some way, maybe, as you said, AI will replace you. I think that's a scary thought, but it's
Are
obviously
you guaranteed? No, not some ways, guaranteed hoga. Guaranteed AI will replace
yeah.
us.
How do you think yourself of kind of shaping your role or uh,
So the only relevance that people like me will have, right, is we'll have to do non-repetitive tasks. One of the reasons I write books, I do talks like this, I travel around the world, I travel to new places, I try to build new businesses for Marcellus is anything which is repetitive, whether that is coding, whether that is credit underwriting, insurance underwriting, equity research on large cap listed companies, financial modeling, anything which is repetitive will get AI'd out, right? Even HR asking for CVs, interviewing people, making job offers, anything which is repetitive, AI will do it cheaper. It'll obviously be a huge boon for a labor constrained world like Europe, Japan, even America is labor constrained in many ways. For a country like India, this will be a big challenge, right? This will probably be the defining challenge for India over the next 10 years as AI rips through the Indian middle class and takes away a big chunk of the 40 million middle class jobs that exist in India.
mm, mm. Um, I think maybe also people are always interested, how do you invest? And is it any different from this one third philosophy? Just curious to pick up
Yeah,
your.
so all my money is in Marcellus's products only, leaving aside whatever I left in the UK, which is in a pension fund in the UK. That pension fund in turn is tracker funds, some American, some European tracker funds, and leaving aside what I have in the NPS in India. I think the NPS in India is a fabulous construct. It's
Mm,
tax free, it's low fees. It's again, then national pension scheme in India is also tracker funds. So both in the UK and in India, I've got pension money in tracker funds, reasonably large sums of money for my modest circumstances. And then the rest of my money is in Marcellus. The Marcellus money, as I said, is 40% invested in our global compounders product, which is primarily a US and European small and mid cap product. And the remaining 40% is invested in our consistent compounders product, which is primarily a large cap quality product. Um, and that's it. And I've got some cash to pay this year's fees for my son, and I'm going to get a bit of a cash buffer so that
mm.
in case he needs some extra money. Because with Trump doing all his drama bazi, I didn't know how much money would be required to put my son through college. So I've kept a cash buffer. So barring the cash buffers for my children's education, the rest of my money is in equities, UK tracker, UK or European global tracker funds in the West, NPS in India, and then global compounders and Marcellus consistent compounders. And remember to diversify. You don't need to have loads of investment. As long as you're clear in your head, diversification कैसे होता है? What gives you diversification? What's giving me diversification is half my money in the West, half my money in India, right? Enough cash to pay for the next 2 years of cash calls for my children's education, and then usual stuff, buy enough medical insurance to make sure all medical exigencies are taken care of. Thankfully, Marcellus does that for me. Much like you guys in America, in India as well, Mediclaim has become the norm where the company buys big insurance cover so that employees' medical exigencies are covered.
Got it. Now, we are a few minutes away from closing. So I want to ask you, beyond yourself or your books, what is the one figure or a book one should read, to expand their thoughts on wealth and thinking about it.
So there's a lovely book that taught me a lot about how to think about retirement. So there's a guy called Ashwin Chabra. Now I think he used to work in a wealth management firm, but now I think he manages a big endowment. So the Ashwin Chabra book is called The Aspirational Investor, right? So he lives in America. Ashwin Chabra lives in America. He runs a big family office in America now, I think. But it's a very good book. It's a very good book on how to think about savings. It taught me a lot when I wrote Coffee Can Investing. I learned a lot from Ashwin Chavla's book when I wrote. So this is the book, Ashwin Chavla, the Aspirational Investor. I found it enormously useful for figuring out how to invest, right? So इसको read कीजिए, and then leaving this aside, this reading the Ritholtz website. I think the Ritholtz website does a fabulous job of talking sense. Morgan Housel is part of that whole ecosystem, but the Ritholtz website, RITHOLTZ, right? I think they have a lot of what they have done in America. We have tried to do in India, which is write sensible material, accessible material, which upper middle class people can read and find useful. So I get a lot of joy from reading the Rithol's website. So this beyond just investing, there's reads on what's happening in the world of investing, weekend reads and so on. But the man who runs it, Barry Ritholz, he writes a a weekly column. So this aspect of America is very useful, and we've tried to do that. So Marcellus, we write plenty. If you want to be on our mailing list, just put your name or thing on the chat ka dabba. Put your name on the chat ka dabba, and Dhargat will put you on our mailing list. But reading regularly about sensible investing from people like Morgan Housel, right, and there's Ashwin Chavda ka framework. I took the framework in coffee can investing from Ashwin Chavda's book, and I credited him as such. So if you haven't read Coffee Can Investing and you don't like reading Indian books, then read Ashwin Chavda. I think some people have asked any plans of getting into MF space. So we've applied to SEBI for a license. They have given us what's called an in-principle license. Hardik and colleagues are trying to meet the conditions. When SEBI gives an in-principle license, you have to meet certain criteria to get the license. We're trying to meet those criteria. Time will tell whether we can get the license.
Thanks. Feel free to answer any questions you feel relevant on the chat.
So US healthcare, yes, I think Shuman Paul is asking, are you building positions? Well, we have an investment in United Healthcare. I can't tell you whether we are buying more or not. That will be unfair, but we have a position in United Healthcare. As I said, rupee depreciation, don't lose too much sleep, right? It's factored into the stock price. Just diversify. Half your money in America, half your money in India. Don't make the mistake of not having an Indian component to your wealth. If you have half India, half America, it gives you similar long-term returns and it allows you to sleep better at night. Will you share the recording? I think that'll be the host's call. Hemant has to make the call. Gift City, as I said, for you guys, I don't think it's particularly relevant from our perspective. It's relevant because we are using Gift City to invest in your part of the world. If you want to invest with us in Cayman Islands, you can come directly to Cayman. You don't have to come via Gift. Any comments on blue chip versus mid cap? I would say, Sailesh, focus on blue chip, focus on large cap. Indian small and mid cap is an area fraught with danger at this juncture in the world. US exceptionalism, with all the craziness happening. So Ganesh, I've lived in various parts of the world for many years. I don't lose too much sleep about what politicians shout about. I'm sure Trump will rave and rant. Ultimately, I think the American economy will pull through just fine. We keep a very close eye on the American economy. My reading is it's in great shape, and a lot of the media that you're reading, a lot of the media commentary that you read in America is the liberal media commentary, right? The media in America naturally has a liberal bent, and therefore much of what they write about is their political prejudices rather than sound reporting. The American macro data and the earnings data from companies, right? Both data on, say, jobs, data on bond deals, and the earnings that the companies are punching out suggest that the US economy is in great shape. When I go to travel in America, this is not just now, for the last 2 years, I find a labor market which is super heated. So if I land in, say, small towns like, say, Kansas City or Des Moines after 7 o'clock, after 7 p.m., it's impossible to get a taxi. Truck drivers are getting paid $250,000. There's labor shortages across the land. And that to me suggests that the American economy actually is pretty heated up as opposed to being in a difficult state. Similarly, in India, I think the current weakness, we've been through 6, 7 quarters of really weak earnings. I think we'll go through another few quarters of weak earnings, but India will recover. India will recover from this current bout of weak job creation and AI inflicting damage on the jobs market. These are the two most lucrative markets in the world to invest in, India and the United States. The only two large free market democracies in the world. And Krupa, I think the US-India trade deal will happen. They want to make money. We want to make money. Trade deal hoga. Obviously, there'll be plenty of grandstanding and dandabazi and negotiations, but the trade deal will happen.
Yep. I'm positive too. want to be mindful of your time, and I just want to take 30 seconds and mention that we are live with Marcellus as a investment fund opportunity on INRI platform. Uh, with INRI, have been had the you know the pleasure as well as the humbleness to have Saurabh and his team offering these funds. You can get, if you are interested, you can fill up this form and read more here as well on what Saurabh mentioned about the different funds, which are available with Marcellus. I'll share this link as well into the chat. Yeah, and we'll share more over email too. So with that said, thank you, Saurabh.
Thank you so much. Thank you. Thank
Yes.
you.
And thank you to all the participants. I think a lot of them, 90% of them stayed over for the 1 hour session. This only speaks of, what we are doing today and how important it is. And
Keep it up, Hemant. You guys are doing awesome work here. You're doing
yeah,
awesome.
thank you,
Keep it up.
Saurabh, and look forward to meeting you again, either in Bombay or in the US later.
See you. Hopefully, see you in Silicon Valley one of these days.
Yes,
Take
yes.
care.
Yeah.
Bye.
Thank you, Marcellus team,
Thank you.
making this happen.